Well, g'day there, friends and traders right around the world. You are here with James on this Wednesday afternoon market recap. There is about 30 minutes left in today's day's worth of trading. However, there is a lot to talk to you about in terms of individual trade setups that have triggered this week, others which are still forming, getting very close to triggering, and also that very important relationship between the US dollar and what's happening in the commodities markets. Most importantly for us, or pertinently to us, is that of gold and silver. So when it comes to the actual markets, again, we have about 30 minutes worth of trading, but the Dow Jones Industrial Average, it is pushing up another 5.5 points. It still hasn't broken out above its range. We have been rather stagnant for quite some time now, bordering on about 3 weeks. We're sort of just trying to push and grind a little bit higher. We don't have any true reversal signals whatsoever. And if I bring up these exponential moving averages, you can see that we're just nicely trailing along with this rising 10 exponential moving average. This is the same for the S&P 500. Again, a little bit more of a push to the upside. We are up about 3.2 points as I sit down and bring you this recording. But again, in terms of early reversal signals, we aren't really seeing all that much to be concerned about. Again, we're expecting this trend more or less just to continue its grind higher. Now, what's exciting about this in terms of the tech companies, which I'm about to cover, is that again, the Nasdaq is still pushing relatively nicely. It has moved above that 6,700 trigger, but when I start breaking down into some of these individual trades, you can see for yourself that on Monday we started to flinch around that 174.95 entry on Apple. We pretty much closed there as at Tuesday, but today and during today's worth of trading, we're closing up about $1.18 as I sit down and do this recording. So you can see the entry here, 174.95. We're trading just shy of 176 at the moment, so a pretty healthy breakout for Apple. Again, if I continue this with Amazon, you can see that we are pushing above that 1,125 entry. We tagged it more or less on Monday. We had a doji candlestick yesterday, but today we're up just over $10 on the intraday activity for Amazon to the upside. So this is looking like a really healthy continuation trade. We identified this candlestick pattern over here over the weekend. This was after its earnings call, dating back to late October. And this is a very healthy sort of setup and a continuation type of chart for Amazon. So I'm very happy at the current juncture as to how Apple and Amazon are working out. Also, in our top 12 list, we have COP, which is trying to push on up a little bit higher. We do have 2 consecutive dark candlesticks. They are mirroring that of Hangman candlesticks, very close to our resistance area, or at least our target on this trade. Personally, I'm not in COP, but it is still a very healthy trade. You can see again, very nice separation of these exponential moving averages. Our trigger is at 52.60. We're making our way up to 54.40. It wouldn't surprise me if we see the markets continue their advance during Thursday's session if COP definitively hits our target. So pay attention to that. That trade will most likely be closed out by the end of this week. Now, what is also relatively interesting too is that Google, along with Apple and Amazon, we're starting to see a little bit of momentum flow into Google. So during today's activity, we are up another $9. Amazon and Google are working more or less in conjunction, or very close, very similar. It's almost like a mirror image to one another. And again, we're getting very, very close to that 1,066 bullish breakout, which is going to take us above the high, or the intraday high of this upper candlestick, again on the back of that earnings call dating back to late October 2017. Now, IBM is another share of interest. This has been a trade from 155.72 below, and we're looking at more or less IBM stopping in this green box and then reversing. We're looking for a potential bullish trade to the upside. So at the moment, if you are in IBM, if you shorted IBM below 155.72, at the moment, it's a very healthy trade. You should be looking to liquidate this to sell those puts that you entered into, and then begin looking for those early reversal candlesticks, which are probably going to show up towards the end of this week. If not by next week, we should start to see a couple of white candlesticks developing around this green area of support. This green rectangular box on my screen is simply the gap support, the open window, which is dating back to the earnings call, which was announced on the 17th of October. So we may push on down a little bit further. We can really go as low as about 146. But at the moment, during Tuesday's and Wednesday's session, we've got 2 consecutive doji candlesticks. So it looks as though, and also with this rising 50 exponential moving average, it looks as though this is potentially going to be that support area where we begin to see those reversal signals. And then we'll be looking for IBM to rally all the way back up to about 163, if not 162 per share over the coming months. So think about that also for IBM. If I extend this conversation into that of the US dollar, this is very interesting. This is something that I've been eyeing off for quite some time. Again, we still haven't broken above 95.22. I'm still expecting this to happen at least, or potentially in this month, if not by December 2017. But before we get above this, there is always the potential potential that we come back down and retest the breakout pivot point. So at the moment, I mean, it's 50-50 as to whether or not the US dollar is going to definitively break above this level. What I'd personally like to see in a perfect world would be to see a lower back test of this neckline. You can see this inverse head and shoulders, which is forming. That is the left shoulder, which I've just sort of circled, a very ugly sort of left shoulder, but that's the head. And then you've got the right shoulder under construction, which is most recently broken out. We're setting up that of a stair-step continuation type of pattern, but generally you see these types of patterns retest, and then this is the perfect sort of buy entry around this location. But having said that, I'm still willing to start or begin nibbling on call contracts for the US dollar index if you want to trade UUP, or even if you trade Forex as well. There is a very healthy trade, a potential trade, an opportunistic trade on the US dollar in appreciating in value into the close of 2017, which should negate or at least give back or reclaim a lot of the losses which have been made on the US dollar for 2017. Now, if I move into silver, this is a relationship which generally works, or at least correlates inversely to one another. It looks as though we are sort of at the apex of this symmetrical triangle. We still haven't broken out, but again, this is going to depend largely on what the US dollar does. So we've got our two triggers here, 1541, 1656. None have triggered yet, but I wouldn't be placing my entries any tighter than what they are on my screen at the moment. Again, the impetus, or at least the contingency, is largely based on what happens with the US dollar. And as that chart pattern continues to, I guess, construct over the past 4 months, we've been seeing again positive and bullish divergence take place. It looks as though commodities are going to be, I guess, transitioning into sort of a rough season. It does look as though we are going to see lower prices for commodities as we enter into 2018. If I bring up gold also, I mean, first of all, let me just push the correct keys on my screen or on my laptop in front of me. You can see gold is starting to see a little bit of a bounce. I mean, this isn't, I mean, personally, I'm not calling this a tradable sort of buy if you're a swing trader. It's not something that I'm looking to do at the moment. I'm relatively optimistic on, I guess, the US dollar appreciating in value and breaking out to the upside and sort of reversing this bearish trend that it's been in for 2017. And that in and of itself should act as a major cautionary red flag if you're looking at commodities and thinking that they are potentially a good buy opportunity around these, relevant or subsequent levels. I mean, respective levels here on GLD at 121.77. So we don't have any true breakout yet. There isn't all that much of a symmetrical triangle. If anything, it more looks like a descending sort of triangle. You've got the high up here, you've got the lower high, and at the moment it looks as though we've got a third subsequent lower high under construction. However, support is still holding, relatively speaking, around that 120 area. And also, if I draw this again, I mean, I've got the green area of resistance. It's sort of inverse in terms of the support being red and I guess the resistance being green. But if we are nearing the apex, very similar to that of silver, we are looking for a volatile move in commodities, and that is most likely going to correlate with a very large either appreciation or depreciation in the purchasing power of the US dollar, or at least in that US dollar index that I've been sort of talking about and referencing in these market updates. So think about that as well. There is tremendous opportunity there. But just to recap, I mean, we're starting to see the spoils of Apple. You can see breaking out. You've got Amazon also breaking out. You've got COP, which has almost hit our target at 54.41, and also IBM, which is giving us a tradable opportunity or very close to that once we start to see some bullish candlesticks around this respective area. Now, Netflix is still moving sideways. Tesla hasn't triggered. It hasn't really gone anywhere since its earnings gap. This looks like a short-term sort of consolidation or continuation pattern to the downside. But having said that, I'm still expecting this to try and gap and move back up to 320 or even as high as 335 to retest some of these macro support areas as potentially new resistance. And that is looking more and more like a bearish sort of chart under construction. So it wouldn't surprise me to see Tesla sort of round the year out 2017 relatively weakly. And continue sort of that trend potentially into 2018, which is, I guess, a different sort of dialogue that I'm having now with Tesla for quite some time, because we have been very bullish on this stock and it has compensated and rewarded us very handsomely as well. So a bit of a change happening, I guess, the undertone of Tesla. It looks as though we are moving into sort of a weakened outlook for the share price of Tesla. Baidu is still doing everything it can to come back up and to retest this red box. But again, no trade activity on Baidu. And Boeing Airlines, again, getting very close to that breakout area at 266. It still hasn't done that. But if I bring up the ADX and also the CCI, it's looking quite healthy. The commodity channel index is still holding above that positive 100 area. And the ADX is flipped out from that neutral sort of holding pattern, or at least that resting area, on the 20 level too. So I mean, this is ticking all of the boxes for another trend breakout, a trend continuation. And it's another trade that I've sort of been speaking about that hasn't triggered yet, but is still looking very healthy and sort of optimistic in terms of price breaking out above that last swing high. So on that note, everyone, if you have any questions whatsoever, please email me. You know my email address. I'll say goodbye to you. Enjoy your Wednesday evening, and I'll be back with you once again for some more market commentary as the week progresses. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.